If you're a real estate investor, I need to show you something. You're paying 200K for a duplex that makes you 1K cash flow per month, while people are buying 70K Shopify stores, making them anywhere between 5 to 15K per month in cash flow. One takes 15 years to pay back, while the other may take 6 to 12 months if you only just maintain it, and shorter if you grow it. Now, let me show you the math. For 200K duplex, you may be putting 40K cash down and the rest financing with a mortgage, and you have all of those expenses where at the end of the month you may be left with $200 as cash flow. So annually you would be making maybe 2.4, 2.5K in cash flow from a 40K cash investment on your end. Now, if you take a look at the numbers, 40K, that's 6% cash on return, and it will take you 16 years just to get that cash amount back. Now, for a 70K Shopify store, those typically make anywhere between 5 to 10K. That's monthly profit, not revenue. And then you have all the management and risk like software. And of course, I'm not talking about the cost of goods or ads. Let's say monthly cash flow around 4.5K, and annually you'll be making nearly 70K. And that's just if you maintain it properly. So in math, you're making 92% on your cash investment. To get your return, it will take you 13 months or even shorter if you grow the business further. Here's the difference. Those 70K in real estate, you may be getting around $350, $400 in profit per month, where the same 70K invested in a digital business will bring you around 5.4K per month in net profit. So that's 15 times more monthly cash flow. Look, I'm not saying real estate is bad, it's absolutely fantastic and it gives you equity, but let's see the cash flow. So of course you have equity over time, you have the property appreciation, which always goes up, and you can leverage the bank's money as well. And of course that's something tangible you can actually walk into, and you have the tax benefits there as well. In reality, the cash flow is very, very low compared to your invested cash, and it will take you 15 to 30 years to actually build something with it. And if you want to sell, it will take you 60 to 90 days to get cash in your bank. And then of course you have tenants problems and whatnot. And of course it's super market dependent. There is math here that tons of people actually miss. And that's if everything goes completely right. So let's say a new property, good tenants, no repairs. But if it's an older property, you have HVAC, roof repairs, plumbing issues, and just unexpected things that do happen. So all of a sudden you end up with 10 to 20K in repairs over 5 years. And all that profit you made from renting it actually goes to repairs. But of course you still have the equity in the property. Now let's see what a digital business gives you. Let's take a look at a 70K Shopify store making 70K a year in net profit, which is completely reasonable. So as you can see here, every year you want to be growing, and eventually you end up with more net profit in your pocket. So in 5 years you can make nearly 500K in cash flow, and you of course own the asset, so you can also sell it later on. But you have to keep in mind that the profit is not always consistent. You can have bad days, bad month, bad quarters, but eventually if you lay it all out yearly, you can still make that same amount of profit. And there is always huge growth potential, especially with AI. So ideally in 5 years you're gonna make 490K in net profit, and then you're gonna sell the business for 350K. So you made 840K on a 70K initial investment 5 years ago. Let's take a look at 60K invested. So in real estate, on a 5-year return, if everything goes completely right, you'll be making nearly that amount back. If it's an older property, or if you have mortgage and you still manage tenants and you have to pay a management company. Now with digital business, on 5 years, you're gonna make 490K in cash flow, and if you grow it, you can even make more. And of course, you own it and you can sell it at any point if you want out. So which one is better for cash flow in your opinion? But real estate is safer. Is it though? Look, there are tons of risks with real estate. You have market crashes, you have interest rates, you have tenants, and of course natural disasters. Not to talk about regulation changes like rent control. And in a digital business, you have platform changes like Facebook, Google, Shopify, and then you have supplier issues like COVID, for example. And if your chargeback rates spike through the roof, you might lose your payment processor. But here's the thing with a digital business, almost everything is replaceable, and you can do it very, very fast. Let's say your supplier goes away, you can easily find another supplier in less than 48 hours or less, unless it's a very, very custom product. You can get another one within the same day if you have proper SOPs. Product or angle, you can pump out ads very, very fast with AI UGC, just in minutes. And if you need to pivot, you can do it in a week. And the most important thing, you can do it from anywhere in the world. Imagine taking care of a plumbing issue in your house while you're in Bali. The truth is they both have risk, but in a digital business, you can sell in less than 30 days. You can leverage seller financing. Things can be fixed and improved very, very fast. You can be anywhere in the world and things are very, very replaceable. You might think, but I know real estate. That's great, because when you're gonna buy your first digital business, you're gonna use the same exact skills. Let's look at the diligence, for example. When you're buying a property, you will do your property inspection, you can do title search, all of the verifications, the expenses. And the same when you're buying a digital business. You're gonna want to see all of the payouts export, you can check if they actually own the domain, how long customers are staying for, what are they saying in the email support, and of course verify the profit and loss statement. It's exactly the same mental model. Essentially, you check if the income is real or not, are the expenses fully accurate, and if the seller is lying. You just need to cross-verify everything, and you can do it very, very easily with AI these days. If you can do real estate due diligence, you can do this as well. You probably think to yourself, but I can leverage real estate. That's true. Banks will give you 80% of the purchase price. But you can also leverage acquisitions with seller financing, where you put less money down and you pay the owner out of the profits of the business. And you won't need bank loans when the returns are much higher. So no bank owns your assets and you control the terms. Now, let's take a look at this case study where David bought a store for 20K. Now for you, that seems very, very cheap, just like buying a used car. Here's the deal. So the full purchase price was 20K. He put 70K down and then 3K in contingency for the seller to keep posting organic content, because that's how he was getting his traffic. And the store was very, very young, so only 6 months old, but it was making anywhere from 3 to 5K monthly in net profit. If you look at the equivalent in real estate on 20K down payment on a 100K property, you're making $150 per month in cash flow if you're lucky. Lots of buyers passed on this deal because they think 6 months is super, super young, super risky for them, and they only want safe stores with years of history. So they miss where the actual flip happens. Now, what David saw, he saw organic traction, which worked very, very well. He kept the seller on for posting for 30 days to make sure he gets the same amount of sales, which in the meantime, he took into paid ads. And for him, it was a super low entry point to start with digital acquisitions. And now it's making 4 to 5K in monthly net profit consistently. Now, let me show you what a deal actually looks like. Let's take a look at this coffee subscription brand. They're asking for 105K. Their annual profit is 96K and their monthly net profit is 8K, so the multiple is sitting around 1x. They also have a very good traffic attribution and the key metrics are very, very healthy. The churn is extremely low for a subscription brand like this. That means their coffee must be really good. So with all the management and misc, they're netting around 7.2K a month. Now compared to a 100K property, you may be left with only $300 per month in net cash flow. In this scenario, the digital cash flow is 24 times higher. Let's take a look at the 70K store we recently sold. So the sale price was 70K, all cash. In the last 12 months, they made over 700K in revenue and over 100K net profit, which is really decent. And in the last 3 months, they were actually growing, making 15K net profit per month. So the multiple was just under 0.7x of net profit. Compared to 70K in real estate, you're left with maybe 2.5K a year in net profit. In this scenario, the cash flow is 65% higher. But let's see what the buyer can do. They can take that 150K in annual cash flow and buy 2 rental properties, and now they're actually diversifying their investment. It's almost the same thing if you do it with 200K. Digital business always wins when it comes to cash flow. And that's exactly what private equity has been doing for years now. What they do is they buy a profitable business for a 3 to 5x multiple, they improve the business, they stack everything up, and they sell it for a higher multiple for a larger PE firm. And then rinse and repeat. And you can do the same. You can buy those businesses at 1 to 3x annual net profit multiple, improve the traffic, improve the overall business, stack multiple of them, and then sell it for a higher multiple to someone else or a firm in this case. And then you just rinse and repeat. So it's exactly the same strategy, smaller scale and better returns. You have low entry points like David, for example, and then you have the sweet spot, which is around 70 to 150K. And then above 200K, you're already looking at better businesses with a whole team in place and overall better operations. So you pick your entry point based on the capital you have today and your risk tolerance. But it's probably not gonna last long. More and more people are finding out about it, just like you watching this YouTube video right now. So the market becomes very, very saturated. That's why the best opportunities are right now and not in 5 years. You can use a safe strategy just like this one, or you can do it multiple times a year and grow very, very fast. And this is what we see people are doing. And it's very, very accessible to anyone right now. Here are the stuff you need. You need deal access, not the ones on marketplaces. You need access to private deals, just like we have in Wasabi. You need proper verification framework where you check everything, make sure the numbers are accurate, and that you are not buying a scam business. And you also need structure support to make sure the deal is in your favor. And that's exactly what we do. We work with high net worth individuals and groups, helping them buy their first digital business. So they get private deal flow, due diligence support, deal structure and negotiations, and of course we help them close on escrow and grow the business from there. So if you're an investor with over 100K looking for new cash flow, not a startup, we have a link in the description, fill it out and we'll be in touch. So you can close your first deal in the next 90 days.